Good afternoon. So you've been listening to a lot of interesting and engaging speakers all day today. You've learned lots of insightful facts about where technology and where development is intersecting, and what is possible at the moment. And even those individuals who are trying to stretch and push us towards a better built environment with better live, work, and play, so we can have an enjoyable walk down the street, so we can have an incredible living experience. And so what Steve asked me to do and what Dennis asked me to do today was to share with you what we're doing in MIT's Real Estate Innovation Lab, and also a bit of what we're doing in Design X with respect to looking at technologies at the frontier. But without being able to do that, I wanted to bring a picture of where we're at in terms of technological adoption overall, because it's a very, very exciting time in the world for us to be engaging and understanding what is going on with respect to technology. And it's helping us to meet a great deal of challenges that are coming away. So ultimately, what we're learning is that technology is actually happening at a faster rate than it ever has before. For some people, that's a little bit jolting, but for those of us walking around MIT, it means excitement, but it also means challenge, ethics, responsibility. So technological change, and what do we mean by that? We mean how are technologies arriving at your front door for you being able to consume them, either as a company or as an individual. And so technologies actually are moving to us in a faster rate. So around 2000, in 1919, it took approximately 65 years for technology to move from being in the lab to being at our front door. That was a fairly large amount of time. But we didn't have an industrial research complex, large amounts of global R&D spending backing us up to get to where we needed to go. In 2019, it takes approximately 25 years for technology to move from being at the lab to being at our doorstep. Global R&D expenditures are actually up. Although it's surprising, sometimes we're reading about in the newspaper, particularly in the US political climate, that R&D expenditures are down. Although they're slightly down for us, the rest of the world is actually expanding. So last year, we spent $2.19 trillion on global R&D. That's just under 3% of global GDP. So we're starting to actually really expand the rate at which we make investments in intellectual capital. Now, that's very, very important because there's a lot of things coming our way that we need to actually expand to account for technological progress. The private sector is also meeting this need. So last year, in 2018, we saw that venture capital, global venture capital, was at all-time highs. Venture capital in China, venture capital in the United States, and venture capital in Europe, all-time highs since 2000. And we saw that there was approximately 14,247 deals done. So that means companies overall around the globe are starting to expand, and about $207 billion went into their equity coffers. Real estate is also changing, and we're also starting to shift to take part in not only R&D as a capital source, so government and university capital sources, which is what MIT represents, we an R&D environment for the built environment, but we're also actually starting to take venture capital, which has been unprecedented. When I first landed here at MIT 7 years ago, we did not talk about venture capital. We did not talk about prop tech or CRE tech or housing tech. We didn't discuss these things. But 5 years ago, it started to trickle in mass. And last year, we had 20 billion alone. Now, these numbers are transforming the rate at which we actually do digital and technological change, the rate at which we actually advance and start to solve and resolve problems. So climate change is getting to be an incredible challenge for us. When I first started my career as a financial econometrician about a decade ago, we started estimating numbers around how climate change was going to impact us and what it actually meant for the built environment. We saw that first movers who are actually engaging in investment for green buildings, green infrastructure, started to receive value premiums, somewhere between 13.3 and 21.6% more per square foot for a given transaction. Now, there's been 42 studies that have shown this since that time, and they haven't actually shown a discount then. But what has incredibly increased or changed the game is the amount of capital that's going into the cost of climate change. Last year, we spent $340 billion on property-related disasters. We spent $117 billion just for chronic flooding. That's an incredible number. And since 2000, we've actually just spent $2.5 trillion, or last year's R&D budget on natural disasters. So we're spending a lot of money on things that we could potentially be thinking differently about or more strategically about. And then there is the big sleeping elephant in the room, automation. Automation is a silent, progressive change. We wake up one day from, say, 1960, when we used to have the ability to do a manufacturing job with the task that we've always been able to do, that we were trained in trade school to be able to do. And now those types of tasks, those types of routine tasks are being rehearsed, thought about, and designed with high-skilled labor creating algorithms to automate them. The World Economic Forum has actually calculated that ultimately, by 2035, somewhere between 35 and 50% of jobs will be impacted for this. And for our sector needs to pay attention for an incredibly different reason. We don't keep up with automation like everybody else, so it makes us think we're safe from those tricky things. But we've got two other major problems. We don't actually produce enough human capital to take over those routine task jobs, so we actually need the robots to do them. And then two, we don't actually create new technological jobs to meet the rate at which we need this change. So we need more investment and more thought in this area. So how do we do this? We are human. It's a beautiful thing. We're human, we're creative, we're exciting, we're energized. We wake up every day and we have a passion to make the world a better place. Every single person in this room, do you have a passion to make the world a better place? Raise your hand. Good. Welcome to MIT. It's our motto. We want to make the world a better place. And one of the tools that MIT employs, besides our passion and our energy and our enthusiasm, is technology. It's a tool. It's a tool that we are inspired to create every single day. And so what types of tools are we bringing to the table? MIT just announced this year that it will be spending about $1 billion in creating the human capital infrastructure to deal with automation. It's very, very exciting. So the MIT Schwarzman College of Computing will be coming on board to deal with automation, automation, automation. And urban science will be a big core part of that. We're getting ready. We're getting prepared on how we're going to tackle this challenge and train the people to do the jobs that we want them to do in our sector. Oh, come on. You know, that's the tricky part about MIT. This is a technology we've been hanging out with in the back of our minds for a little while. Robotics. We've been working on robotics since the middle of the 20th century. And there's a few places in the world where we can go where there's a core urban sector that is devoted in terms of agglomeration of jobs and human capital to create the next generation of robotic technology. When I first landed at MIT, I was completely shocked by what robots can do. Now I'm completely dumbfounded. We're pushing our natural language processing and our image recognition AI so far that we're actually starting to touch what it's like to be a little human. Not a big human, a little human. Artificial general intelligence is the next wave of where we're pushing. We're trying to get to the actual average intelligence of a 3-year-old. MIT's core mission in the next decade, with the help of Google, is trying to aid in the advance of technology so that we can live and work and play, but with our robotic buddies, our robotic pairing. So we're not exactly scared of them. We know how to work with them. We know how to communicate with them. 5G. 5G, 5G, 5G. I feel like this week is like 5G talk, also because it's getting deployed. So fundamentally, the thing that's going to be able to drive a lot of these changes is little infrastructure plays like this. I say little, it's kind of really big. But 5G is the ultimate area where we can start to create every single one of our devices, our watches, our phones, our windows, our doors, and transforming them into technology Wi-Fi hotspots so that we can continue to actually pulsate out connectivity for seamless movements for robotics, vehicles, and potentially us. This is Gartner's 2018 technology hype cycle. Gartner has actually produced one of these every single year since 2000. And what they do is they do a fantastic job. They go around the world and they interview laboratories and they interview R&D groups and they interview companies and they identify actually what are the latest technologies that are moving up the pike, moving out of the lab into commercial productivity and out until massive market uptake. They even have some really cute names like innovation trigger and peak of inflated expectations, and trough of disillusionment, and slope of enlightenment, and plateau of productivity. Yeah, it makes me giggle too, because I'm like, where did they come up with this? But there is a growing technological literature that is supporting where and how we start to bucket technologies. And the naming that they have here denotes innovation trigger around new technologies. They're just coming out of the lab. You're actually in an incubation place for it. You're actually at the MIT Media Lab, which is a place where new technologies are constantly being developed year after year. In the peak of inflated expectations area, this is where you hear about it in the New York Times or in the MIT Technology Review or the Harvard Business Review. Hype, hype, hype. Does anybody want to tell me what's being hyped right now? AI? AI? Okay, what else? Blockchain, 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 blockchain. Anything else? Driverless cars, driverless cars. So these technologies start to be hyped in the New York Times, but we actually had our autonomous vehicle conferences about 3 years ago here at MIT. We start talking and we start deploying those technologies as fast as we possibly can. And so what ultimately we're seeing here is this notion of general conceptual awareness, or general exceptional or expectation forming around these technologies. But then what happens in this graph? It drops off the face of the earth. We go into the trough of disillusionment. Ooh. And then we live there potentially for a long time. And then we only come out into this plateau of productivity. So some technologies that we recognize very, very easily, like solar technologies or 3D printing, they're starting to come out of that trough. But augmented reality or mixed reality or virtual reality seems to, for whatever reason, keep living on there. So in the lab, we wanted to understand, okay, how long does it take for technologies to actually come to us? How long does it take that lab to get them out to be the first startup, to have the first commercial product? How long before the first competitor comes along and starts trying to nick away at those first mover profits? How long before we actually start to see it showing up on every single shelf, or for you to be able to buy it to put it inside of your building? How long before it is something that we don't even put on this chart anymore as something that is an emerging technology hotspot? Well, we looked at these, and we looked at these over the past 20 years. And what we saw was that Gartner actually put 206 technologies over the past 20 years on this chart. And what we learned was that they put about 10 to 20 new technologies per year. It's a pretty big range. Some years were hot with technology, some years a little bit less. The least that they actually put was 4, and that was actually in a recession period, noted. And the most that they put was 20, and that was in a boom period, or just the expansion after the boom. And what we saw was that actually there was a period of time that these technologies lived inside each of their designated zones. Remember that innovation trigger, peak of inflated expectations, trough of disillusionment, slope of enlightenment, and plateau areas? Well, they live in there for a specific amount of time. So in the innovation trigger zone, for them, it lived there for about 3 years, or was denoted there for about 3 years, which is very interesting because it takes a long time for technologies to actually be developed, potentially. Peak of inflated expectations, 2 years. Blockchain, blockchain, blockchain. It's in the New York Times. It's on the cover of MIT Technology Review. Harvard Business School, big conferences around it. That's where we are right now. And everybody's thinking about how they're going to deploy it. And you should. But you should study it like technologists, not like hypists. Trough of disillusionment, 6 years. It hung out on average in this place where we didn't quite know how to do what we thought it was going to do for us. It didn't move as fast as we thought it was going to. It didn't actually expand or spread to all of the commercial diffusion channels as fast as we thought it was. And then we kind of neglected it. Or better yet, we stopped paying attention to it. But then, bit by bit, commercial productification found its way. It chugged itself out of the environment and into the slope of enlightenment and out to the plateau of productivity for a good 14 to 16-year run. Now, the kicker was, I was like, I want to know which one of these suckers died. I want to know which technologies I should actually not invest in or not go with, and I want to know the ones that I should, because I want to get rich. I want to know. I want to invest, right? Now, this was the tricky bit. Every single one of these technologies made it from innovation trigger out to plateau. But interestingly, not a single one of them died. 9 of them changed their name, pivoted or embedded in another technology, but not a single one of them went to their grave. Now, my lab, which is filled with wonderful, brilliant people, we just jumped up and down and we were like, I don't get it. Why is this happening? And the more and more we dug into the literature, the more and more we looked for evidence that technologies actually go by the wayside at some point in time. And the more we refined our vocabulary, in our understanding, commercial products, commercial firms, individuals that do not pay attention to technological change, they die all the time. But technologies, they are a part of our general human capital environment. They are a part of our world. And once we put them in, we don't take them out. We can always pick them up and embed them in another technology. We could always pick them up and use them for another use. That's the power of technology. So if that's what's going on with technology in general, what the heck is going on with technology for the built environment, right? So those are some fun examples, Andrea, that I hear about in the New York Times, but I'm at the MIT World Real Estate Forum, and I want to know what are technologies that are going to impact me now. Well, that's exciting. You said blockchain. Yeah, pay attention to that. Autonomous vehicles, definitely pay attention to that. But there's some other things that we also need to pay attention to, like digital twin. Never before have I walked into my lab and started yelling and saying, ladies and gentlemen, we have something we really need to pay attention here. We have technologies that are ultimately embedding and coming together in a way that we have never seen before. And that is because there is a bundle of technologies that are coming together to make digital twin available and possible. Not to mention a large-scale amount of fundamental R&D that's getting ready to push it out to commercial production for everyone. Digital twin is the digital representation of a physical object or a physical structure. Maybe a building. Actually, in fact, a building. It was developed by NASA to be able to work on machines, little widgets, issues while people were in space and they weren't able to actually go in and identify tweaks or problems. And due to ubiquitous sensing on the spaceships, they were actually able to identify where there was potential technological problems on the ground here on Earth. And then send signals back to the astronauts. Here, make twitches, make changes. Now, for our world, where we have lots of systems inside of a building, something like 50 to 60 different systems depending on the scale of your commercial asset, we have a lot of moving parts that need to be able to talk to each other. And so far, we do not have a technology that actually is able to deal with that. Digital twin might help us by seamlessly connecting with ubiquitous sensing and helping us actually have a dashboard to isolate any problems coming down the way. Hypercells. Hypercells are actually a very forward-thinking technology, and it has a lot to do with optionality in real estate. So ultimately, we need to be flexible in the types of spaces we are going to design because we have all sorts of new jobs that are coming down the pipeline for us. So I said by 2035, 35 to 50% of jobs will either be new or automated or some combination of both. We will have likely 1, maybe 2 real estate development cycles during that time. We're going to have to start to think about being potentially flexible to meet those skills and technologies that we don't actually understand quite yet, right? Hypercells are automated physical structure forming bots. They move around and meet their friends to be able to actually form structures in physical space. Augmented reality. Augmented reality is actually transforming at a rate that we didn't actually expect. We expected virtual reality with the goggles to come and hit us actually first, right? We thought, oh, okay, augmented reality will be something that comes later or not necessarily as quickly as we would need it to. But augmented reality could potentially help us with understanding the physical dimensionality of the outsides of our structures, or ultimately become an area for future cash flow or revenue generation. So what this picture actually depicts is that the building ultimately transforms into an advertisement hub, or a locational transformation, or a contextual awareness in your glasses. Now, what's interesting about this is that who is going to ultimately understand the value or underwrite the value behind what is on the building? And who is going to ultimately own the rights to that? Hypercells with digital twins, the pairing of two fabulous technologies. Fiber bots, which came out of this very building. So Neri Oxman in the Mediated Matter group has said, well, why do I need actually the bot to maneuver into place? I could actually have it build itself in place. So fiber bots will actually start to physically manifest in terms of the structure live. And so ultimately, technologies are going to be coming in less and less of a robotic space where we have them not only maneuvering live and physically on the spot, but also without mechanical transformations altogether. So aeromorph and 4D printing will enable us to actually pre-program the materiality of the structure and allow it to actually physically embody what we pre-programmed it to do already. Now, some of these are a little bit far afield or still living in the lab. But the original story, the original lesson that I taught you was what happens with technologies. Once they come into our general lexicon, once they come into our general use, we don't lose them. They become a part of our general lexicon of technologies to apply to the built environment. We have 132 general technologies that can actually directly impact the built environment. We produce about 2 to 3 new technologies per year for our sector. And it takes about 20 to 25 years for them to diffuse to the general public. That means every single year there are 2 to 3 new technologies that you can embody or potentially bring to market in your building. So one of the things that we want to do or make sure you walk away from here today or from the World Real Estate Forum overall is an understanding of how you can actually start to use some of this stuff. But the problem is that technology, design, these types of interventions, they seem very, very far afield. And also when they manifest themselves finally in the physicality of the built environment, they don't always look like what they did in the lab. And they weren't always named what they were named in the lab. So what we've been doing at MIT's Real Estate Innovation Lab is actually learning how to track these technologies and track them going into the physical space themselves. And as you leave these doors tonight, you're going to start to get a little bit extra in terms of evidence or empirical results around how that's doing. So what the lab ultimately does is it conducts a series of empirical studies. It identifies design and technology interventions in the built environment, and then it pairs that with financial asset valuation models. And what we try to do is align the really far-flung incentives of technological change and design and all of the fancy things that everybody thinks we're doing with reality, with what you actually need to get something across investment committee. And so as you leave here, in just 1 minute, you're going to step out into MIT's World Real Estate Forum Science Fair. Last year, we had a fantastic time all together where everyone explored the projects that were actually happening on the ground here at MIT. And so what we wanted to do was, while you had a lovely cocktail, yes, you're going to get drinks, and some lovely food, you're able to peruse around and look at some of the projects where we're trying to understand what is the risk and return, what is the value drivers behind design and technology interventions around automation impacts on the built environment, the value of awarded design in real estate, so Starchitect, 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 design metrics in real estate asset pricing, the value of daylight in commercial office space, co-working, 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 boogie, boogie. Financial models for large-scale urban development, and ultimately, you will be deciding who wins. So this is a science fair. We will be awarding prizes tonight to those who actually do the best job at explaining everything to you. But most importantly, we're so glad that you came out tonight, and we're having such a fun time engaging with you and in learning from your brilliance and your thoughts and your perspectives. We hope that actually what you take away from MIT is an understanding of technology, and technology that evolves and serves our world and makes it better, which is what you want to do, right? All right, with that note, please.